There is no way out. Everything, and trust me, everything, is going deeply wrong for the Fed. What's about to happen could shake your job, your rent, your savings, even the price of the coffee in your hand. And no, it's not an exaggeration. Picture a giant switchboard. Each knob is an interest rate. Each wire is a credit line. And the people in charge of that switchboard are now arguing over which cable to pull. One side shouts, "Cut rates now. Flood the streets with cheap cash." The other hisses, "Do that, and prices will explode like a gas leak." The shouting is not just noise. It is a sign that the Fed's old playbook is no longer working and will turn against you unless you act now. The first step, of course, is to watch this video carefully until the end. And if you think I'm joking, please leave this video now because it won't help you. Meanwhile, if you really want to change, I'll give you a secret strategy that will allow you to profit from this decline of the Fed. Let's start. The biggest alarm bell is inflation. For months we were told it was cooling. Then the latest report jumped like a ghost in the mirror. Rent, food, power, almost everything shot higher. Core inflation, the number the Fed swears by, rose faster than paychecks. That should have forced another hike, but the bond market is already cracking. Mortgages are freezing buyers out, and small businesses are choking on loan costs. The Fed is standing on two trapdoors at once, and both hinges are rusty. Now add politics. The president wants rates cut so growth looks sweet in an election year. Investors hungry for another rally cheer him on. But the Fed, built to appear independent, knows cutting too soon could ignite consumer prices. The chair sits in front of angry cameras, sweating, saying he will watch the numbers. Translation: he is trapped. If he cuts, he gets blamed for inflation. If he waits, he gets blamed for recession. No wonder market screens flicker like faulty streetlights. Behind the scenes, regional banks whisper their own fears. Commercial real estate loans are wobbling. Offices sit half empty. Tenants pay late. If property values sink, collateral shrivels, and lenders could fall like dominoes. The Fed can lend cash, but it can't conjure tenants. Banks, once eager partners in spreading credit, are now hoarding reserves. When banks hold back, small towns feel it first, then big cities, then all of us. People sense the tension. Car buyers watch quotes climb from 4 to 8%, shake their heads, and leave the lot. Home sellers cut prices and still get no offers. Store owners see costs rise but fear raising tags because customers might walk. That squeeze, higher expenses but flat sales, is another crack in the Fed's wall. It was built for clear signals, not chaos. Even high savings yields don't save you. A bank may brag about paying 4%, but after taxes and inflation, you're still underwater. Every morning, your dollar buys less fuel, less cereal, less peace of mind. The safe harbour of parking cash is now a trap. The Fed can raise rates again, but that slows the economy. It can cut rates, but that feeds higher prices. That is the no-win circle, at the heart of what's going wrong. But panic is useless. Let's turn fear into a plan. The first step is to stop hoping someone else will save you. Politicians pass bills with giant headlines, but help often takes years. Big institutions protect their own balance sheets first. You need to protect yours now. Begin by tracking every dollar. Yes, it sounds boring, but it shows leaks in your boat before the storm grows. Next, split income into 3 buckets: spend, save, and invest. Use the 75 to 15 to 10 rule. Live on no more than 75%. Invest at least 15, stash 10 in cash. If that feels tight, remember the alternative: drifting with no cushion when the next shock hits. What about debt? Any rate over 7% is a fire in your wallet. Put it out before chasing fancy stocks. Credit cards shrink wealth faster than investments grow it. Once the burning debt is gone and you've built a small cash buffer, move to step 3, owning assets that can outrun inflation. Stocks are the easiest gate. Broad index funds let you ride the economy without picking single winners. Yes, prices swing, but markets beat inflation over long spans. If you enjoy research, hunt for businesses that lift prices faster than costs. Grocers, energy firms, specialty tech. They often pass inflation to buyers, so profits and your share of them grow. Real estate can also shield you, but tread carefully. Look for areas where job growth is firm and supply is tight. There, landlords can adjust rents with inflation. Avoid office towers unless you love risk. Residential units near schools or transit still draw tenants even in downturns. Remember, you make money on the buy, so negotiate hard and check demand. Some ask about gold, Bitcoin, or commodities. They can hedge chaos, but they bounce like a rubber ball. Keep them a small slice, maybe 5%, and only what you can hold through swings. Panicking out at the bottom erases the safety they were meant to give. As you build this fortress, keep learning. Read one article a day on macro trends, one book a month on investing basics, and listen to diverse voices, not just cheerleaders. Knowledge adds layers of armour no market can steal. Back to the larger drama. The Fed's dilemma won't vanish soon. Supply chains stumble, wars shift energy flows, demographics squeeze labour pools. Each shock forces the Fed to choose between growth and price stability, and every choice leaves scars. Prepare for more surprise announcements, more sudden dives, more late-night headlines saying, "Emergency measure unveiled." Before I wrap, here's a test. If the Fed slashes rates next month and stocks leap 10%, will you chase the rally or stick to your plan? If a surprise hike tanks the market and social feeds scream doom, will you dump holdings or buy bargains? Write your answers down. When the moment comes, follow your own playbook, not the crowd's panic. Finally, remember, money is not an end. It's a shield and a tool. Use it to protect your family, back ideas that solve problems, and create breathing room so you can think clearly when others panic. The Fed can shape the tide, but your boat's design and your hand on the tiller decide whether you reach the far shore. So keep listening, keep learning, keep your courage, and press subscribe. Everything is going wrong for the Fed, but not for you if you take action now, and also subscribe now. Stay alert, stay adaptable. The story is far from over, and missing the next twist could cost you dearly. See you soon. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions.